Hello guys, glad to have you on board again today. Sorry I couldn't make it to record a podcast yesterday. Might be a shorter one than usual today as well, as I'm just doing this while the baby is napping, and anytime it wakes up I will have to stop. So let's just get it started, not wasting any minutes out there. So not that much to say again regarding cryptocurrencies, even though we've got a confirmed close signal, which is oversold signal after a squeezing pattern, which is interesting but very risky. Say the highest level of risk possible to take on a trade, which means trying to get to trade a reverse right after a squeezing pattern. So just be aware that if the market keeps on going below that low, still suggests that the market will try to trend bearish, meaning that the market goes below oversold level. But if the market reverses out of oversold, this is great. It just means that the market try to go bearish, oversold the momentum, and is brutally reversing afterwards, which would just basically mean that what happened a few days ago was just a trap. So question is whether this will last or not. I thought the market would try to break down that trend line. It did, but apparently it isn't successful at that current stage. So we'll see what happens the next following in the next few days, because it will be interesting some way. Look at how the market will react to yesterday's candle, because it broke both highs and lows of the day, closed at the high but still closed into the previous day's candle area, which kind of makes it a neutral doji candle but an oversold candle in terms of momentum. And if we break that candle by the low, suggests the market wants more bearishness, and we could eventually forecast the market to break this low as well, and probably this one in a row. So we could expect the market to make a dip in here, which is pretty low, and I wouldn't expect the market to do that. So having some kind of reversal in here would be kind of normal in the first place, because if we still take the 2014 forecast, the thing is that back then we started with the bullish outburst first before breaking to new lows, which means we got the people to reactivate and regain interest in the market, and then we went down chasing the stop losses below the supports. And I think in terms of psychological pattern, this is what seems to be the most probable to me as well to occur right now. First, we gather interest in the market, not with the USDT thing, but more with a market burst, breaking resistances, so getting higher than that, even higher than that, and then the market may retrace entirely and make new lows, just basically to all of those who will stupidly buy the highs and buy the bullish breakups. That would just be wrong-footed and stop-loss hunted right after. And it seems more like a logical trap pattern to make, instead of just trying to trap first on the bearish side and then go bullish. Because to me, in the long run, the goal is to go bullish. So you might want to trap the bulls, and you might want to do it by first giving them a bullish signal in that area, so all the stupid traders will buy here, where smart money will basically handle the risk management, which means taking partial profits. So bearish demand in here, where probably lots of stupid guys will just try to buy in here, thinking that will go up forever, and regain interest in that market, where obviously we should have some bearish demand. And I'd like to be among those who will do this, meaning speculative buying in here, managing the risk out there, be ready for another lower low in the pullback in here, just to fuck up some stop losses and buy on those low again for a next run, following 2014 plan basically. So until further notice, yesterday is interesting. Just watch out for what's about to come in the next few days. And obviously, if it's bearish, that's kind of part of the plan either way. It's just normally we should have more odds to go bullish than bearish. But until the market has decided, you just really don't know. It's a cat in the box and Schrodinger's cat kind of issue in here, which means you cannot trade this by anticipation, as odds are really limited. I'd say 60 or 70 to 30 and no more than that, which is not enough to go into a speculative scenario entry. Same thing goes for Ethereum. Ethereum will basically follow Bitcoin. If it manages to hold the 200 area one more time with a higher low, I think obviously we'll make a higher high afterwards and probably reach out to validation level, which is next step is 300, and I'm not necessarily sure that we'll find any resistance in here, and we probably may have to outburst even higher than that. So we'll see. It's a matter of liquidity still squeezing in there, so I would hope for that squeeze to release by the upside, and we're currently trading at the downside, so we'll see how it goes. We're not oversold in here. So yes, patiently waiting to see the market, and if it manages to break through that bearish trend channel to, in the long run, search for this one, which will be the target, and probably for wave 3. So you can expect this to take quite some time. It's not the target for now. It really is for wave 3, I think, that will reach out to that channel. So first, we'll reverse the channel. Will be kind of a goal in here, reversing the channel, grinding our way up, and then waiting for the lower channel to grind itself towards wave 2, and will give us normally the timing to probably get to buy that wave 2 pullback. So anyway, we're pretty far from current prices forecasting, so we're doing long-term views in here, so I suggest you remain really patient out there and wait for price confirmation before getting any other trades in here. So I remain speculative buyer on Ethereum, but I'm ready already to surrender the stop loss if it has to go to the downside. Moving on to other asset classes, and we obviously have to talk about the indices. So we've had kind of a rebound on the euro area today, but it isn't working just well. As we're reaching out to first resistances, the market is brutally reversing. So it's not yet, the candle's not yet closed, but the momentum is back to neutrality, and if the trend remains bearish, neutrality in momentum signals that the bears basically can look out for selling entries. And I think that's what might be at play, because in terms of perspective in here, we've got multiple options. First option is to say, okay, the market is going down by 2 bearish rates, ABC, ABC, okay, and ABC will be, okay, we're out, it's over, and we found the bottom. That's an option. I'd say second option is just counting down the lows, which makes 1, 2, 3, 4, 5, and potentially 6 low. And normally when we are trending, you're not making this. You're generally making odd. You're just making even odd numbers. So I would suggest 7 seems more like a number for me. And even though the structure could suggest yes, ABC, 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 that will be okay. Now we're done, and we could break up some resistances. So okay, in that perspective, first I'm not selling the euro indices anymore because I think too dangerous to do so. Second problem is that we'll have some gaps still open below the current prices, and quite hell of a gap, and I think a gap that we might close because this one is what we call the breakout gap. It's basically when we got there, we gapped by a breakout. If it was an acceleration gap, I thought it would have decent odds to be support. I mean, if we gapped that area, probably it would have been the support. Problem is, as this is a breakout area, suggests that we might to fill that gap, might want to fill it because there are. It's hard to explain that in just a single video, but basically it's a market maker obligation to offer each and every price to traders, which means in a technical perspective, the market makers have to offer those prices to clients, and as they didn't, meaning those prices in here, so from 10,831 to 10,863 and 76, those prices never ever got offered to clients. And that's a problem. Normally market makers can't do that, which means they have to pull back to that price. And I would say, even if it sounds bullish, and I wouldn't be bearish on those assets anymore just because of that single reason, but I'm not buying with a lot of confidence because I think that we might just go to that area, fill that gap, and buy in here. And if we do have that, then it just basically gives us a final extension, Not necessary, once again, but just for technical reasons, we might just try to make it anyway. So I'm still patiently looking forward for what's going to happen in the next few days. I think the bearish odds are now very narrow, so selling is not an option in the euro area, but we still have the Wall Street problem. As in here, yes, we can see that potentially double bearish side structures, suggesting this could be an ending diagonal, basically, but so many things are not suggesting the pattern is that way. I would basically say it's wave 1, 2, 3, 4, and 5 to make, and then we're done. So we'll say yes, we're consolidating. We're probably going to have another bearish wave to come further. Still, what I think as well for the Nasdaq index. So yes, yesterday's session, nice high gap, nice upward gap, and the market tried to hold this one. Okay, clap, clap. We managed to make a positive close. But yes, we still didn't manage to make the close inside wave 1 territory. So today could very well be a strong bearish day as well. The question is, we'll see how it goes. Today is really going to be an important session. I think the market will try to go higher, but if it fails and if it closes downward, that gap is not going to last. Obviously not. It doesn't really handle the profile for a... don't know how to call that gap in English. Extraction gap, maybe. That's the way we call them in France. So it's no breakout gap. That's the first gap that will basically proceed creating a trend. We basically trap the bears right away up and then make the breakout gap, the gap that leads us to the breakout and acceleration. So, okay, maybe call it that way. So until further notice, I think that gap, very low probability to hold that price area. Or we're going to need to have Apple showing some strong ever release and push the indices to higher highs. And if that's the case, then obviously then the next trend is going to be crazy bullish. Because if we are trapping bears at such higher prices, then, whoa, gosh, I'm pretty wrong, okay? And that's a possibility. I could be really, really wrong out here. And in that perspective, that gap will be just the exact same as this one back then. And I don't think that's possible. So we'll see how it goes. But I strongly suggest that we might close this gap, fuck up some stop losses at lower prices, push the euro indices to lower lows, and then we're done. Okay, when we fucked up all the bulls, basically this will be a bull trap. We've been trapping the bears for a long time, but the thing is that normally in a range we both trap the bulls and the bears. We've been trapping the bears for a long time. We should trap the bulls, and I think this could be just a perfect bull trap. Those who are getting in here, putting a stop loss below that low, and we just go there, fuck them up, fail to find some buyers. When we trigger stop losses, when we trap the bulls, basically they're not going to get in right after. So I think we might just have a collapse in here, kind of an extended bearish day where no one's buying until the end of the day, and at the end of the day everybody's rebuying. We got some strong V-shaped structure, and in there, yes, we once and for all trap the bears in a brutal area, but we trap them on buying interesting areas, which I think is not necessarily what's happening in here. So we'll see if I'm right or wrong. Anyway, at that stage, I'm very low confidence selling the US indices as well, but I'm still selling them anyway because I think they still have some potential in here to the downside. So other things suggesting that might be the case is the thing that we still have 10-year yields trying to rise in a context that the market just don't want it to be. We've got double bullish signal on yielding 10-year yields. Last time we had the outburst above those levels, basically when the market started to panic. So if we go there, we might have another panic selling in Wall Street. This is what I think might be triggering that next and final V-shaped structure that this one might be bought. So I'm not ready to buy Wall Street, even though I would be if they're doing that final burst. And this could be driven by a final burst as well in the 10-year yields. Final shape in here going to crazy level, let's say, for example, 3.40. And in here, obviously, I'll be ready to sell the 10-year yields, so buying T-bonds, and obviously getting out of getting out of US and getting back in the US indices for some pullback. It's probably going to be dead cat bound structure, but I would still suggest more buying opportunities in the US indices, but especially normally in more value stocks than growth stocks. So we should have all the stocks moving higher, obviously, but more interest into value stocks like General Electrics should be the top gainers and outperform the indices in that perspective. So if I'm right, if I'm wrong, obviously it means that the bears will be trapped in here. The market will try the wrong foot and accelerate to make higher highs as fast as possible and make another V-shaped structure. So that's two options. I really don't know what the market will pick out there. We've got both bullish perspective and bearish perspective. You just need to pick a side, manage the risk, and if you're wrong, you take a tiny loss. If you're right, you take a nice gain. That's how it goes. If you pick the right side, then you're going to take a gain. And don't overthink things. It's basically 50-50 at the current stage. And I'd rather like remaining in the bearish side for the reasons you already know, because I think Apple is a big problem. But if it happens not to be, then I'll just be proven wrong. And that's part of the game when you do speculative trading. So moving from there, we're going to have a look at the forex market because it's moving, and as well, it's moving against the dollar, and that's not a good sign. So dollar's falling today and hugely falling. So we're totally invalidating the previous day's breakout, which once again I thought was totally crazy. And now we've got confirmation that the market is reversing out of it. So out of stupidity that we had the latest few days, and when you look at the trend and the way they looked like was really crazy stupid. We were just kind of grinding our way up without trending, because that doesn't look like a trend. It just looked like a dead market trying to rebound out of every low that was available out there and trying to grind its way up until it got killed. And it just got an headshot today. The market is reversing. No one's buying anymore. Might have a few pullbacks, but I think anyway the market is now reversing to bear side. So we're doing this on a technical level. It's a highly technical level in here. So the market is reversing. Obviously, tomorrow we've got the NFP, so we'll see if it's pushing the dollar back up again. But for now, the signal we have is that no matter what, we already have ADP. It's a good number. So the market already knows what it might be expecting for the NFP, and even though it's selling. So Euro is strong, and that was normal. Because yesterday, and I didn't figure out why the hell the market didn't price that in, but we had 2% fucking inflation in the Euro area, which is enormous. And obviously, the Euro has to strengthen from that, and basically yesterday the market was just keep on making that dead kind of walking thing, trying to break itself through the major levels. So I think we just try to fuck some bears once again. I didn't surrender anything facing this. It's just that right now I think we've got confirmation that the market was just doing it irrationally. We'll see if the candle close is holding today or not, because it's really hard to forecast things when it's not yet closed. But if it do closes like that, it's an evening star pattern closed, and obviously happening below resistance, that's a strong selling signal. That will last for probably 2 to 4 weeks. So you can expect probably a full month of November to be bearish on euro dollar, to be bullish on euro dollar. And I would suggest that all the dollar pairs, and basically USD, GPY, will be the strong losers in here. So probably bullish yen, but even stronger euro, and bearish dollar, because both yen and euro should be strong in the next following weeks, which was normal once again. We weren't supposed to see the euro failing on that support, so showing that reactivation right now seems normal to me. We'll see if the market holds it there, and if it does, then I'll be probably adding a tiny bit of momentum, a tiny bit of leverage on the ongoing positions on euro currencies. So I'll be reinforcing probably the euro dollar, but that's all I'll basically do in here. So not going fully leveraged in here, still remain speculative at that stage, but I'll basically took tiny position reinforcements. And as currently my average entry price is not that great, I simply didn't do a great job in here by speculating on the bullish reversal on the euro dollar. I basically managed myself to buy the average trading price on the range, which is not a good speculative job, but still, as long as it goes bullish in the end and we make a bullish extraction out of that range, then I'm fine. It's just that I wish I would have done a better trading and had better prices, which is obviously not the case in here. Same thing goes for GBP. GBP has been grinding way lower than what I would have expected, but doing the same double bottom structure. So still suggesting I was right in the end. The thing is that, first of all, the market fucked me up so many times in those kind of deadly kind of trending, stupid trendings. But anyway, no matter how stupid the market have been making those bearish trends and grinding to lower levels that weren't necessary, even though in here I managed to have average price on the on those ranges, will still give me a positive outcome in the end, which is all I care about. Being right, being wrong is acceptable if it's manageable. And so far the market never proved me wrong. It just proved me to be trying to prove me wrong, which is not sufficient enough to just wrong foot me and make me surrender the stop losses. So it needed money management, but not necessarily invalidations, okay? So that's all it was. And as we now have those reversal, I'll just basically stay comfortably seated in here and waiting for final confirmations by getting us to the upper areas in here where I'm going to have to make money management and then building my way up on those trends after that speculative area, which once again wasn't very well performed so far. But we'll still need to validate those things, and that's pretty much lots of steps ahead. So first we need to handle those close to stay this way or close to this way, and we need to confirm them by pushing on the same direction the next few days. Another one that concerns me, and I need to make money management out there. Same thing goes for NZD yen. I have to lower my leverage on this one because the market is rising higher, and I think we're going to reach out to the major trend channel to find some bearish entries again. So just as all the forex pairs, I think I'm there. I've been wrong as well, going there too early, and probably going to fail and have it a very bad entry price out there. So this is the price I have. So I've been lowering my leverage to go back to 3 on 5, and I just killed the additional leverage I had, because basically I tried to make my selling breakout entry, which lowered my entry price, and obviously the market fucked me up. So four contact on the bottom. So I rarely see those kind of patterns. Problem is that as the volume has risen, and I said back then, volume is rising and that's a concern. So if we get a bullish outburst, then we might just change the timing. So it will require probably additional timing, and I think in that perspective, prices will just try to go up here. So you'll tell me, then, if you think that, why don't you reverse? Why don't you just get out to get in here? Well, if you are thinking this, you just got it all wrong regarding my trading strategy, because you know how I'm doing. I'm just trading a context, and I'm trading only one side, never two sides in the same strategy. You don't play double ganging in here. You just do the way you're supposed to do. I'm supposed to sell, so I'm selling only, and I'm just managing my selling risk, but I'm nothing close to buy in order to sell at better prices later. That's not how it works. I'm not playing the range game. I'm just forecasting that range to go for bearish range, which means we should extract that range by the bear side. So I would have liked to sell the higher boundaries of that range, but having the middle price is good enough. So I hold those current prices just because, and guess what? That's what I try to teach you guys. You just don't know. If the market is reversing in here for some stupid reasons, I don't know. Yen is strengthening today for unexpected reason. The market is making higher shadow candle. First of all, you're not going to have that exit. Secondly, that exit is not confirmed by momentum. And first of all, if the market just reverses, because you just never know, and if you just gone out in here and bought right here, and if the market reverses and goes bearish, what are you going to think? That now that we're back to support, you have to take the loss and reverse. And what if the market just reverses once again? We're range trading. So what you need in a range is to have the perspective of what's the next move to come. Are we just playing a flat range in which you want to buy low, sell high, and just keep on doing this, not holding a single position into further trading, or you want to trade a range inside a trend? To me, the trend is bearish, and we're going to keep on doing it. But the thing is that we might range a longer time than I was that the one I was expecting. So I might just need to review the timing, not the scenario itself. So forecasting this, I remain bearish. I want to have some bearish exposure on that market. It's just that as it may require extended amount of time to get there and to get the bearishness restored, I just reduce the leverage to eventually sell again upon signal only at better prices. Okay, and try to rise that trend, rise that rise that selling entry to probably what's going to be the mid part of the range. So I expect this to probably be the mid part of a range. So you can expect us to probably go range in that area. Now, once again, in here, I'll have the average price, which is not great, but good enough, because all I care is for the market not to go there afterwards, but to go there. And if it goes there, I take a nice gain. If it goes there, I take a loss. Simple as that. That's how it is. If we find the top of our range, retracing to the mid part and then breaking up, I'll obviously trigger stop losses because that scenario will be over. I forecast bearish range. If the market builds a range and extract from the bull side, I'm out. It's simple as that. All right. AUDNZD is just playing its game as usual. We're ranging in here, so I remain bullish, waiting for the bullish breakout to occur. In a shorter time frame, we already found it taking profits, suggesting we might just range between those two boundaries, digesting things. It's a double taking profit. So yes, I think that breakout has to be lowered. I think the market will just try to die in here, range bullish, bearish in that area. And what I'll care for is to have break up above that profit-taking structure, suggesting the bulls are taking it over. And it should be confluent with that bearish trend line. So I would suggest we're going to range for a long time on the AUDNZD, kind of AUD strong, NZD strong, AUD strong, NZD strong, and kind of two sides action, sideways action before we finally get the AUD to overcome its little brother. So until then, wait is the only solution. Wait for the range to build up. So right now we just need more information. We've got information that the first bullish impulse might be terminated, but that's a taking profit. So we could just very well go slightly higher and reach out for the potential targets in here. Wouldn't necessarily be the big of a deal. So we're still waiting for a resistance to create, a range, a consolidation to occur, still remaining above that low and just consolidating, then regaining strength and getting back to those resistances again for this time breaking them up and going to the fully leveraged boundaries part of AUDNZD scenario. This is a long-term one. Been waiting for a long time for this to come and still do at the current time. I'm waiting for the timing of that market to go decorrelating the AUD and NZD currencies. So obviously we're going to terminate on this today. Apple is going to release. Hard to say what's it going to be. We've been opening today and we're flat. So at the current stage, at the current time, the market just doesn't know where to play. We're trading that bearish trend line. So if it reverses, we're obviously going to go there with high risk of breaking down. If we manage to install prices slightly higher, then we're going to temporize, and I think that's what the market might try to do. In some kind of perspective, I think that this is where we're going to try to set ourselves for the earnings release. It's basically what the market may do because it's what makes sense. It's what's just maintain pressure and just maintains doubt. As I said, the market just wants to maintain a sustainable level of doubt just to make sure that neither the bulls or the bears will prove some strength. It's just kind of an in-between battle. So if it's in between, we're going to just trade there. And basically, we're going to release in here. And if the release is good, we're going to open gap in here. If the release is disappointing the market, we're going to open gap below those lows. And we're going to gap 5% up or down, and the market will probably push on afterwards. So negative release, we're going to open right in here in the bearish trend channel and then try to break it up. But trying it doesn't mean it's going to happen. We can very well have a bullish breakup and the market failing and reversing. It's been happening even though we had good numbers. Could very well push the market to break up with a gap and the market selling aggressively in here and reversing. That could very well possible, as we could just have the opposite as well, gapping down and the market's buying again in that area. So everything's possible. It's a big mess. It's a psychological battle in here and nothing close to technicals. I think technicals is just the battlefield of an ongoing battle, and I'm just concerned about the retail traders in here who doesn't really know any fucking thing about the market. We're just thinking that this will rise because we cannot be bearish in here, or everything suggesting that this is just a bearish trend channel that will break up. I mean, just like every stupid analysis I've seen back then on the Bitcoin. It's just, as for now, technicals should really be in the background, set in the background. You don't think technical right now. It's a psychological pattern. So everybody who's just trying to analyze this thing with technicals is just fucking wrong. All I care is that this structure has a psychological effect. The head and shoulder pattern suggests that we have a range that can heavily reverse. We shouldn't spend that much time at such higher prices. Okay, and that's to me, in terms of psychological patterns, the worst case, because all those who are interested by those prices are not are not institutional traders. It's retail traders who are talking about Apple right now. So retail traders are trading this in a structure that suggests we might have some bearishness. So psychological, technical patterns suggesting a psychological state of the market. It's all I need to play that fucking reversal and huge reversal. We'll see if I'm right or wrong, but in here I'm not playing technicals, and I think those who are playing technicals only in here are just going to be probably wrong, because yes, it's kind of a 50-50 scenario in here, but to me, the psychological part of those tradings suggesting we have a lot more odds to go bearish, and this is the only reason why I've been taking some speculative entries out there. But I'm not crazy also. I'm not putting a lot of leverage in here. I remain leveraged enough for if it happens to be proving me wrong, then I just don't want to lose at all, okay? So that's it, and Facebook, even though it's been publishing good numbers, as you can see, it's been gapping up and not that high of a gap, and I mean, just look at that. Even though the asset was oversold, it still managed to make a bearish candle close. The numbers were great, we have to say it. Facebook wasn't that bad of a release. Even though the asset was already oversold, it didn't manage to truly reverse. So you just see it how you want to, but I personally think that the market is just fucking bearish, and no one wants to see it that way, but it is. We've switched to bearish, and we're going to make a bearish range, which means it's not yet bearish trending, but we're bearish ranging, which means we're not going to break highs. We're going to make lower highs until we manage to break the lows, and whenever it will happen, we'll have a bearish trend, which we call the fucking bear market. So I think all the signals are there, and I'm going to finish on this. Just take the fucking XPX on a monthly chart, and that doesn't, I mean, it should be saying something. Just look at that. The volume has been dropping for a few months, which means we made higher highs with a fewer volume, suggesting retail traders activity. Now volume is surging. We make a fucking bearish candle close, and it's hugely bearish, and everybody think that's just nothing. So you have to explain me something in here, because that doesn't sound normal to me. All I suggest in here is that the volume is going to rise again with other bearish candles, and we'll slowly but steadily switch to bear market. So everybody thinks that this is just normal. So to me, no, it's not normal. Absolutely not normal. The volume has been falling recently, and now that we're finding some volume again, we should be concerned, because that volume is really it's not out of normal, because we're just basically trading 20-month average volume, but it's the first time for a long time that we've managed ourselves to rise above a 20-month average volume. And it's a fucking bearish candle. It's not something you want to avoid and say, okay, that's nothing. That doesn't mean we're going to stop there, obviously. We're going to have some retracement. But I strongly suggest we found the market top. And everybody will like to ignore it and think that this is not the case. But I think it is, no matter what you think. It could be that case scenario. I mean, bearish trending. And okay, but back then, we didn't have that before. Now we have it. So this, to me, is what we had back then. And now we're at that stage. At that stage, we're having bearish candle closes with volume. And still everybody think this is normal and that we're going to rise forever. So, in a technical perspective, everything's red. Institutional traders are just watching the market, waiting for a confirmation of that signal to switch to bear market trading. And all the retail traders are getting in, thinking that they can buy Apple because it's going to rise, buy Amazon, and buying all the big names because those companies, they like it. I mean, everybody uses Amazon somehow, or Apple, or everybody knows about those things, Facebook. So you might want to buy them because you think they're good products. Yes, but what the fucking price is. You don't buy a fancy car just because you like the car. You buy the car because you have a good price for it. That's the same thing that happens in here. Those who have a rational approach of trading knows the prices doesn't suggest any kind of buying or rational buying in here. So we just don't buy. We look at what the market is doing. If it rises one more step and climbs higher, it's just going to fall even harder afterwards. So this is all I'm focused right now. I'm handling my bearish risk, making sure I'm not taking too much risks, because retail traders can still try to rise prices again. I wouldn't be surprised of it. The thing is that if they do, I just don't want to lose much money. I want to lose tiny amounts, and if it goes right, and if I'm right, and if the market is crashing, I want to take a lot more money than what I've risked in here. That's all I care about. I'm playing odds. I think odds are in my favor. If they are not, then that's no big deal. It will be next time, and it will be someday. I will obviously have the market top, even if that means failing 2 times in a row before getting into it. Okay? So, that set aside, what I'm watching closely today is to see the yen rising again, because in a daily perspective, or yes, we're going to even have a look at the monthly chart. So, monthly chart, this is not bearish, okay? We're trending right into the channel, and we've made monthly bullish close, yes, with an upper shadow candle. We've basically closed right at 50%, which means we cannot necessarily consider this as a bearish candle. It's kind of a neutral candle. Some elements of that candle are bullish, suggesting we've been gapping down, but closing up and closing into the previous candle's body. But we've broken the lows during the month, and we left an upper shadow candle. So it's a mixed candle, not bullish, not bearish, just says it's a 50-50 battle. We've got the same element, same odds for bulls to bears to keep on doing it. Bears could still push it, but bulls could take it over without problem if they manage to reach out the previous month high. Look at sine wave, because in just a candlestick perspective, this doesn't give us any odd. It doesn't shift the balance from one side on another. So we'll have to look at other technicals. Now look at this. Momentum is as low as it's ever been since 2015. We're pretty much off those lows. So this is generally what we call hidden bullish divergence. So in terms of momentum, pretty much bullish. We've terminated a bearish oscillation, or nearly terminating it, so we're ready to cross bullish anytime soon. We just wait for candles to make that happen. In a cycle perspective, the market is cyclical. We don't see any type of breakout like it was like then when sine waves completely lost and out of synchronization. This is trending behavior. Now we're ranging, okay? So ranging is you buy low, sell high, buy on support, sell on resistances, and you obviously want to have the cycles ending. So in here, under resistance cycle ending, the bears took it over, all right? I never thought they would push us that low, but they did. Cycle is now probably terminated. We mean 1, 2, 3, 4, 5, 6, 7, 8 month bearish. Generally, it suggests we should be terminating, because if we have a look at the cycle length, we're going to go there. Okay, cycle length, average length is the number in here when you take it to the last candle. So with 14, you divide that cycle by 2, which says 7 candles average cycle. So we're at 9 bearish candles into it. So we're all above average length of the cycle, and normally we should find bullish there. We're on support technical areas. Everything suggests we find some bullishness in here. So I would suggest yen is going to rise, euro is going to rise as well. So dollar is finally, obviously, to me, going to go bearish. Still needs price confirmation. Okay, so in a monthly perspective, what I like to see is for the prices to reach out to that area again, breaking it up. And as you can see, we've got single bearish cycle in here, no momentum confirmation. Anytime we go there, it's going to be my buying signal, okay? To confirm and adding some money into the yen's indexes, into the yen scenario. For now, I remain speculative as the market may range that area for an extended period of time. All I want is for us to remain above that low and in the end, get ourselves as close as possible to that high, and even, if possible, trying to break it up. That's it. That's all I had to say. Bye, guys. I'm going to try to have a look at the questions if there are not many of them. Okay, not many candles, so I'm going to answer this. So, sorry, but you should ask this one in the French. Nvidia is a finished scenario. Profit should have been taken on Nvidia, and it's a perfect trade. It goes from top to bottom. Very nice scenario. It's been worked hard. We'll see if Apple is the next one to come. Tesla as well was great. Tesla is a very great done job. Nvidia as well. Facebook, I've gone out way too early and got trapped by the bearish gap. So Facebook is a trading scenario I never got myself into. That's a shame, but that's how it is. When it's too late, it's too late. There was quite a lot of volatilities, yes, and we can expect some volatility as well on Apple, I think, because it's probably going to match the consensus, which means it's either going to be a bull to bear rattle, and I'm really concerned about what's going to happen today. Lots of pressure on that market, so you can expect volatility on the after hours. Oh, and please, Phil, what platform broker do you prefer? In terms of platform, I think you know what the answer is. And in terms of brokerage, I've been testing almost every broker out there. Just a few of those that I just don't want to get myself into, like eToro and things like that. Really, I don't see any interest of getting there. But anyway, otherwise, I just traded most of the brokers out there, and I never had big problems. So I'll just say some are better than others, but I'm not going to give you names because I don't want to do that. All I'd say is basically, despite those who are really doubtful, you should basically not really focus on what the broker problem could be. Just make sure the broker is offering you the assets you want to trade, that they don't have or overextended or overpriced commissions, and that's all I'd say. If commission seems to be on the average, then you're good. If they provide you more than enough assets to trade, then you're good enough. And then afterwards, the names will not be a big of a difference. So you can be wherever you want, basically. Nowadays, everybody is offering kind of the same prices. I would just say go somewhere where there is liquidity, because it's always better to have some exchange or some CFD contractor that has other clients. Just for security purposes only, but that's the only suggestion I'll make. Alright, bye guys, and I'm not guaranteeing that we can make another show tomorrow, so we'll see. If there's not, don't be worried. It's not because Apple ruined me or anything like that. It's just I have my baby boy at home. There's no nanny as it's on vacation, as she's on vacation, sorry. And that's it. So if I don't find the time to cover a podcast tomorrow, there will just not be. And don't overthink things, okay? It's just I'm doing the way I can, and if I can't, then that's how it is. And if that's the case, then we'll see each other on Monday. No problem. Next week is going to be good. Nanny is going to be back at work, so I will have plenty of time to cover this podcast as usual. Bye, guys.